The U.S. labor market lost momentum in July, according to new government data released Friday, fueling debate over the strength of the economy amid President Donald Trump's ongoing trade and tariff policies. Employers added just 73,000 jobs last month, far below the roughly 109,000 positions economists had forecast in a Bloomberg survey. Job totals for May and June were also revised downward, revealing that 258,000 fewer jobs were created over the past 3 months than initially reported. The unemployment rate edged up to 4.2%, compared to 4.1% in June. Which sectors gained and lost the biggest boost came from the healthcare and social assistance sectors, which together added about 73,300 jobs in July. However, federal government payrolls shrank by roughly 12,000 positions, continuing a trend that has left the federal workforce 84,000 jobs smaller than its January peak. Manufacturing employment has now declined for 3 consecutive months, while construction job numbers remain mostly flat. Expert reactions. Economic analysts say the downward revisions for previous months suggest deeper weakness than previously thought. Some point to the administration's trade policies as a contributing factor, arguing they have disrupted the labor market. Despite these challenges, the jobless rate's relative stability has led some economists to note that the labor market still shows resilience. Average earnings grew 3.9% year over year, slightly above recent levels. The Fed under pressure. The Federal Reserve kept interest rates unchanged earlier this week, even as the president has pushed for cuts. Following the jobs report, Trump renewed his criticism of Fed Chair Jerome Powell, urging the central bank to lower rates immediately. With mixed economic signals, slower hiring, steady unemployment, and modest wage growth, the Fed faces a tough decision in the months ahead on whether to move toward a rate cut as early as September.